Heading into the European close on Wednesday, the yen was up, the pound was down, extending its 2018 slide, while the rest of the major markets were relatively unchanged. There was an initial wave of broad-based US dollar demand, though this move was easily absorbed, with even the pound trying to recover out from its lows despite suffering from increasing uncertainty around the Brexit outlook and increased odds for a no deal, which the Bank of England has warned against. Again, the broader market was consumed by all things trade and another round of back and forth between China and the US. China announced more retaliatory measures just one day after the PBOC had attempted to defuse the situation, with the actions coming in response to the U.S. administration's latest 25% levy proposals. All of this has come out of a U.S. policy that has taken a dramatic shift aimed at weakening the U.S. dollar in an effort to rebalance the U.S. economy and pay down a jaw-dropping deficit. Another interesting story in markets on Wednesday came out of Canada. The loonie was already contending with falling oil prices when reports surfaced that Saudi Arabia had begun to sell off its Canadian assets following a recent criticism of the kingdom's record on women's rights. But a later sell-off in the buck and some diplomacy from the Saudi foreign minister, who said Saudi investments in Canada were still ongoing, helped to restore some demand for the loonie into the close. Looking ahead, Thursday's calendar is quite light, with the only notable standouts coming in the form of an RBNZ decision, China CPI, U.S. initial jobless claims, and U.S. producer prices. That's all for now.